Okay, so let's have a look at the 2020 budgeting question 9. It's Houghton Ltd. So with this one, you're going to have 4 parts to the question. So you're going to have part number 1, which is prepare a production budget. So find out how much we need to produce. Prepare a raw materials budget, how much materials we need for the units that we need for each month. And this is given for 4 months. Prepare a cash budget for Houghton for the first 4 months, and then prepare a trading profit and loss account. So the first part we're going to look at is our part A, prepare a production budget. So it tells in the question that we need to prepare a production budget for the first 4 months. So the layout of a production budget, what we're trying to do is find out how many units we require for production. So we need to find our sales, which is going to be usually taken from the question. We're going to add our closing stock. That's going to give us some information from the question that we're going to use to calculate our closing stock. And we're going to take away our opening stock. And that's going to give us the number of units that we need to produce for our production. So the first part is, remember we're doing it for 4 months. So the question says prepare a production budget for the first 4 months from July to October. So we're going to have July, August, September, October. We're going to have our sales, add our closing stock because that's what we're going to have at the end of the year. Take away our opening stock because that's going to be used throughout the year, and then that's going to give us what's required for the budget. So the first part, your sales is taken from the question. So we're going to go to the question up here. It's giving us our sales in units. It's giving us a piece of information. Stocks of finished goods are maintained at 60% of the following month's sales requirements. So that's telling you what our closing stock is. The rest of the information, each product unit requires 4 kgs of material X, which costs €3 per kg. That's going to be used for part B. And part 2 is also going to be used for part B. And then this information here is going to be used to calculate our budget, which is part C. So for July, we got 11,400. So our sales, 11,400. For August, it's going to be 11,600. For September, 11,800. And for October, 11,900. So August, 11,600. September, 11,800. October, 11,900. I'm just going to put November in here because we're going to need November's for later on when we do part B. So November is going to be 12,200. So our closing stock then, we're going to get this from the question. So it tells in the question that stocks of finished goods are maintained at 60% of the following month's sales requirements. So that's telling us that for August, we're going to get 60% of August sales, and that's going to give us our closing stock for July. For our closing stock for August, we're going to get 60% of September. So it's just telling us that we want to have some closing stock going forward for the next month based on what our next month's sales are. So we're going to take, so it tells us that it's 40% into 60% in the question. So we're going to take 11,600. We're going to multiply that by 40% or 60%, and that's going to give us our closing stock figure. So 11,800, multiply that by 60%, 11,900, multiply that by 60%, 12,100, multiply that by 60%, and then for your November then, we're just going to find out what our November figure is. So 12,400. Okay, so we're going to add these on because this is what we finished at the end of the month. These are our finished products at the end of the month. So we just add those up. And that's going to give us our total then that we have. Our opening stock then at the start of the month, we're going to take that away because obviously we're going to kind of produce them. They're produced already, so they're going to be used up. So our closing stock, remember that your closing stock for 1 month is the opening stock for the next month. So we don't know what our closing stock is for June. So we're just going to put 0 in and we're going to take it away. So opening stock for August is this closing amount that we said we're going to have 60% of it for the next month. So we're going to take that away because we've then produced already for August. For September, our opening stock is going to be the 7,800. So remember that 7,800 was this 60% of the next month. So we have them produced already. So we don't need to produce them again. So all what we're doing is that the closing stock for 1 month is the opening stock for the next. We're taking it away because we haven't produced already, and that's going to give us the amount of units that we need to produce for that month, and that will give you your production. So for July we need 18,360, August we need 11,720, September we need 11,860, October 12,080, and November 12,320. Now we need that later on when we look at a different part of this question itself. So remember your production budget, finding out how many units you need to produce for that month. You're going to take your sales, add your closing stock, take away your opening stock. That'll give you how many units we need. Your sales figure is taken from the question. Your closing stock figure is taken from the question. And remember that your opening stock is the closing stock from the previous month. And we're adding on our closing stock and taking away our opening stock because we have that opening stock produced from the previous period because we would have produced 60% of it. And that's part A for 2020 Houghton Ltd.